Hi, I'm Kent Simpson.
And I'm Tom Heath, and this is the Tucson Real Estate Show. So Kent, where are we today?
We are in front of the Poblano Hot Sauce factory here in Tucson, Arizona. They've been a Tucson institution since 1924.
Wow. How'd you hear about this? I've never even been to this place.
Well, I actually heard about it from a client of mine from Massachusetts, of all places. They gave me several of the different varieties of hot sauce that the Segura family produces, and it's fantastic stuff. I never even knew they were here.
That's the way it always is. We travel all over the country to sightsee, and some of the best stuff in our backyard, we don't even know it exists.
Crazy.
Well, this is a real estate show, so what are we going to talk about today?
Well, I'd like to learn why there's a lot of talk about interest rates rising as the economy gets better. Why is that? Why is good news for the economy?
Look, we can talk about why good news for the economy is bad news for mortgage rates, but it looks like they're closed. So I'm going to sneak over into the farm, grab some of them chili peppers, and throw them in my truck before we keep going.
Well, that'd be bad for two reasons. One, farmers protect their product quite a bit, and that'd be stealing, Tom.
Oh.
Two, you're going to have to go a long way because there aren't any farms around here. They ask farmers in other locations like California, New Mexico, Mexico, other places in Arizona to make chilies, grow chilies for them so they can make the sauce.
I think I got it. So they're selling a lot of hot sauce because it's pretty good.
Yeah, it's
and
awesome.
They're making a lot of sauce, so they need a lot of peppers. So they call the farmers and say, hey, send us lots of peppers.
Yep.
Now, if for some reason the demand dries up a bit and they're not making as much hot sauce, they would probably tell the farmers to make less, to grow less chilies.
Got it.
Okay. Now, do you think the farmer, because they're selling less chilies, would continue to grow the same amount?
Not if he's a good businessman, because then he'd have all these chilies with nowhere to go with them.
So he's afraid of getting stuck with a surplus that he can't sell.
Yeah, that's it.
Well, I think I understand the hot sauce business, and I think you now understand the mortgage rate business.
I do?
Let's just replace Poblano Hot Sauce Company with Fannie Mae. Now, they don't sell hot sauce, of course, but they do sell mortgage backed securities. And their raw product isn't chili peppers, it's loans. And they don't get their loans from farmers, they get them from banks.
Well, yeah.
Same thing happens. If investors are buying mortgage-backed securities and there's a high demand, Fannie Mae has to keep making them. If they're making mortgage-backed securities, they need their product, loans, so they call the banks and say, give us more loans. The way banks drive business is to lower their interest rates.
Okay, it's starting to make sense.
Now, the opposite holds true. If the investors aren't buying mortgage-backed securities, Fannie Mae is making less, therefore they need less product, and they let the banks know, hey, we don't need as many loans. Do you think the bank is going to make as many loans knowing they can't sell them?
Well, that wouldn't be good business, just like the farmer.
Yeah, they don't want a surplus they can't sell. So to slow down the traffic, interest rates rise.
Okay, so tell me how this all ties in with the economy.
Well,
I don't get it.
Well, Kent, investors are looking at a couple of options right now. They can buy stocks and they can buy bonds. Mortgage-backed securities are just like bonds. They're nice and safe, they have a long-term payback, and it's a low yield, but they're safe. So investors like to buy those when things are a little volatile. Now, they don't get as much bang for their buck as they might in the stock market, but the risk is a lot lower. Now, as the economy stabilizes, companies are doing better. Because companies are doing better, their stocks are performing well, and so investors want to take advantage of that and buy those. They spend more money on stocks, less money on bonds. Fannie Mae needs to make less, therefore fewer loans are needed. Banks raise interest rates.
Okay, it's the old supply and demand circle, and it applies to loans just as it does anything else, huh?
It sure does.
Wow, Tom. Yeah, you know, one thing I like about working with you is you take something really complicated and make it simple, so much that even I can understand it. Thank you.
Well, Ken, I appreciate that, but I'm a little embarrassed. I'm not sure if that's hot sauce in your pocket or if you're just happy to see me.
It's hot sauce.
Well, that's a wrap for today's show from the Poblano Chili Factory in Tucson, Arizona. We hope you found some value in our message, and if it is something you enjoyed, please pass it along to your friends and your colleagues.
And visit thetucsonrealestateshow.com on the web for more informative and hopefully some entertaining videos as well.